Hello students, today we'll discuss the other concepts of tax, that is capital versus revenue, capital receipts versus revenue receipts, capital expenditure versus revenue expenditure, and capital losses versus revenue losses. So first we have to know what is capital expenditure and what is revenue expenditure. Actually we don't have a certain definition relating these two terms, but according to the cases, we'll recognize whether it is a capital expenditure or it is a revenue expenditure. The first term is acquisition of fixed assets versus routine expenditure. Here what they are telling, capital expenditure is incurred in acquiring, extending or improving a fixed asset, whereas revenue expenditure is incurred in the normal course of business as a routine business expenditure. Means here you are acquiring some machinery or you are improving the machinery or you are extending some building activities. This one is treated as what? Capital expenditure. Next, several previous years versus one previous year. Capital expenditure produces benefits for several previous years, whereas revenue expenditure is consumed within a previous year. Means whatever you are investing in a capital expenditure, you will be receiving benefit for several years. Whereas revenue expenditure, you need to incur in the within the previous year. Improvement versus maintenance. Capital expenditure makes improvements in earning capacity of the business, and revenue expenditure, on the other hand, maintains profit making capacity of the business. Means improvement in earning capacity. For example, you bought a machinery and you have increased the capacity of the business. For example, your machinery is having the unit capacity of 1000 units, but you have improved the capacity of the machinery to where to 1200. Means what here, where it is here, the earning capacity is increasing. Whereas revenue expenditure means what? On the other hand, maintain the profit making capacity of the business. So we have to incur certain expenditure in order to make certain profit. Next one, non-recurring versus recurring. Usually, capital expenditure is non-recurring. Non-recurring means you need not invest always. You have to incur only at a one time. Whereas revenue expenditure is say only a recurring item. Means you have to regularly incur certain expenditure. Lump sum payment versus periodic payment. In order to determine whether an expenditure is capital or revenue in nature, the fact that is that lump sum payment or periodic payment is not important. Lump sum means, for example, you are paying a salary to your employee in 5 months advance. Is that relating to the capital nature? No, no. It's only the revenue expenditure like that. Though the dividing between the capital and revenue expenditure is real, at sometimes it becomes difficult to draw. Therefore, the distinction depends on what facts and surrounding circumstances in each case. Means according to the particular situation, we have to draw the conclusion whether it is a capital expenditure or revenue expenditure. Now, how we have to determine? What are the tests? First one is nature of the test. Any expenditure incurred to acquire a fixed asset in connection with installation of fixed assets is also called what? A capital expenditure. Means you have acquired a fixed asset and then the relating installation expenses also is treated as what? Capital expenditure. Whereas any expenditure incurred as a price of goods purchased for resale along with necessary expenses incurred in connection with such purchase are what? Revenue expenditure. For example, you are doing some manufacturing activity. For that, what you have to do? You have to purchase the raw material, and then after incurring certain expenditure, and you make into the finished good and you resell those. So this all these called as what? Revenue expenditure. Second point is nature of liability. A payment made by a person to discharge a capital liability is called what? Capital expenditure. You took a loan and you are repaying the loan. So what is it? It's a capital liability. An expenditure incurred to discharge a revenue liability is called what? Revenue expenditure. Means you have to pay certain expenses to certain persons, that we call it as what? Revenue liability. You have to pay salaries to your employees is called what? Revenue liability. Here we'll see one example. Amount paid to a contractor for cancellation of contract to construct a factory building is called what? Capital expenditure. Means you have entered into an agreement, but you have cancel the contract. So we have that, we call it as what? Capital expenditure. Whereas amount paid by a person with whom he has entered into a contract for supply of goods for a period of 5 years, but he fails to supply goods for 3 years, the compensation will be called it as what? Revenue expended. This is what? Supply of goods. Means in order to purchase a raw material, you have entered a contract for 5 years, but he couldn't supply for 3 years. So the compensation will pay will be what? Revenue expenditure, as it is a discharge of what? Revenue liability. Okay. Next one is nature of transaction. If an expenditure is required to acquire a source of income, it is called capital expenditure. In the earlier examples only, here they have told already one example. Purchase of patents to produce a picture to the TV sets. So what you will make? You make a picture tube and you got the patents. So in order to get the patent, you have paid certain expenditure, that we call it as revenue expenditure. Means you sell the picture tube. So this is about a source of income for you. Okay. Here, whereas an expenditure incurred to earn an income is a revenue expenditure. Means in order to earn an income, you need to pay salaries to whom? To the employees, or advertising expenses, rent, all these we call it as what? Revenue expenditure. And purpose of transaction. If the amount is spent on increasing the earning capacity of the asset is an capital expenditure. Means expenditure incurred for fitting new windows to a factory building, or you have done extension to the school building, or whatever might be. Means you want to do more activity. Means you, in order to increase the earning capacity of an asset, you are incurring certain expenditure. Okay, that we call it as capital expenditure. Whereas any expenditure incurred on keeping an asset in running condition. For example, you have acquired a machinery, but what you are doing, you are maintaining the machinery, that comes under the part of what? Revenue expenditure. Means in order to protect that fixed assets, you are incurring certain expenditure, that we call it as revenue expenditure. This is purpose of transaction. Next one is nature of payments in the hands of the payer. Nature of payments, you have given certain amount to certain one person. Okay. If an expenditure is incurred by an SSE as a capital expenditure, it will remain as capital expenditure even if the amount may be the revenue received in the hands of the receiver. Okay. See one example here what that is. Purchase of motor car by a businessman is a capital expenditure in his hand, although it is a revenue received in the hands of what? Car dealer, because he is engaged in what? Selling of the cars. Yes or no? So it will be a revenue received for him as a car dealer, but for a businessman it will be a what? Capital expenditure. Similarly, if the nature of payment in the hands of the payer is what? Revenue nature, and it will be what? Revenue expenditure, even it is a capital receipts in the hands of the receiver.